Hello traders and welcome to another video review. Today is Thursday, March 6, 2025. Let's take a look at the economic calendar for today. Overnight data during the Asian session were not that quite satisfying or important. Building approvals in Australia increased from 1.7 to 6.3, beats the expectations. Trade balance increased from $4.92 billion to $5.62 billion. Unemployment rate in Switzerland down from 3% to 2.9, and the rest of the London session is about the CPI and the rest of the construction and services PMI releases, like the one from the UK scheduled for release at 10:30. The major event of today is obviously the retail sales data from the Eurozone and the summit, the Euro Summit, European Union Summit. It starts at 11. 1 hour later, we got the data from the Turkey. 1 week repo rate and overnight borrowing rate together with the lending rate should be set at noon. Major event of the London session, ECB interest rate decision scheduled for release at 2:15, together with the deposit facility rate and marginal lending facility. Please notice that the interest rate decision is scheduled for release at 2:15, and the market participants expect a cut from 2.90 to 2.65 in rate, and the deposit facility rate is expected to be cut from 2.75 to 2.50. ECB monetary policy statement is scheduled for release at the same time, 2:15, and the press conference is 30 minutes later at 3 o'clock. In the meantime, we got data from the USA, non-farm productivity, trade balance, unit labor costs, initial jobless claims, exports and imports. All of this data are scheduled for release at 2:30. Then we got FOMC member Harker to give a speech at 2:45. At 3 o'clock, we got IV PMI from Canada. Then at 4:15, we got ECB President Christine Lagarde to give a speech. At 7 o'clock, Atlanta Fed GDP now. At 9:30, Fed Weller will give a speech, and at the end of the day, at 10:30, we got Fed's balance sheet. So the key event of the day is obviously the ECB interest rate decision and deposit facility rate. Market participants expect the cut. Let's take a look at the euro dollar to see what is going on the chart ahead of this ECB interest rate decision. So the Eurozone has moved higher towards the level of let's say 1.0823. You might be familiar with this level on the 4-hour time frame chart. Let's switch to daily so you can see that this is the level we have placed yesterday. The upper black line is 61% of the Fibonacci retracement of this big swing from the late September 2024 to the early January 2025. So we retrace all of the necessary levels in 3 days. Look at these daily candles. Now we hit the level of 1.0809 ahead of the ECB interest rate decision. Market conditions on a daily time frame chart are extremely overbought. We haven't seen extremely overbought market conditions since the August last year. All right, so 3 days of movement to the upside and we are done, and now you can see this nice movement to the upside after the breakout above the supply zone at 1.05 has been done. We are trading above the 100 periods moving average into the extremely overbought market conditions. So please notice the situation when the market might be very, very susceptible to the pullbacks. Okay, on the 4-hour chart, obviously we are extremely overbought to 86 points right now. So please pay attention to the technical supports as we might move lower, especially if the ECB will not deliver the cut. 1.0630 is the nearest level, and of course 1.0537, 1.052022 is the nearest key technical support level zone and the demand zone. So euro dollar pretty clear. Let's take a look at the British pound. The British pound again is moving higher into the extremely overbought conditions on a 4-hour chart as we hit the 61% of the Fibonacci retracement of the big swing to the downside. So 1.2925 has been hit, and now the market consolidates the recent gains. We broke out of the channel, as you can see, and the market is now trying to make some constructive candlestick formations. Right now it looks more like a pin bar than anything else. All of these levels will now act as the support, of course, including the upper channel line. Let's switch to the daily so you can see, guys, pretty clearly what is going on here. This is the big swing to the downside, and this is the movement to the upside. 61% has been retraced. However, this move here looks pretty corrective. It doesn't actually looks like it is impulsive cycle, too many overlaps, too tight, not too many moves like this. But during the last 3 days, the bulls managed to retrace 61%. We are waiting for the ECB interest rate decision to see how this market will react. If we are going up on all of these markets, what is the US dollar index doing? And on the 4-hour time frame chart, it looks like US dollar index is moving way lower. Again, US dollar is being sold across the board. We hit 50 and 61% Fibonacci retracement, the levels that we established just yesterday. So all of these levels here will now act as the technical resistance levels. So there is no doubt about it. And we are set. Now we're testing 61% Fibonacci retracement, 103.96 into the extremely oversold market conditions. Look at this. We haven't seen this kind of a extremely oversold condition since I don't know, I got data to the October 1st 2024. So at least in a half of the year we have not been that sold out. US dollar is being sold across the board. Does it mean stocks are going up? Let's take a look. S&P 500. S&P 500 4-hour time frame chart doesn't actually move that aggressively lower. However, we can see pretty nice consolidation zone here. So we can take a look here what is exactly going on. We got this level here, 5,769, might act as the support, obviously. Now we got this level here, might act as the support, 5,818. Of course, we got this level, the lows from the November 2024, 5,995. The recent local low was 5,732. So only roughly around 37 pips away from this November low. So in that situation, this might look as the distribution cycle. And if we take a look at the daily time frame chart, it's okay. We don't have any data on the daily, so let's just switch back to the 4-hour time frame chart. It looks like we are pretty much under the bearish pressure. So possibly there is something very well correlated. S&P 500 is going lower, but not that aggressively like the US dollar. US dollar is being sold all across the board. If US dollar is sold, what is being bought? Bitcoin is being bought back up as we bounce from the level of 81,426 back above the supply zone. We hit 92,739 and now we are trying to make some kind of a correction. We're still below the trend line, but it looks like the Bitcoin wants to go higher. The Bitcoin wants to go up, and it looks like we will hit this trend line and test the trend line sooner or later. Please notice the nearest technical resistances. Let me just adjust to the newest data. 93,325, and the other one would be, there you go, here you are, 94,843. So those levels must be violated. Pretty tough, to be honest, for the bulls. But if it is violated, then the next target is way above 100,000. Let me just place a line here as well. This level is 100. No, it's 99,454. So not that far away from the $100,000 level. pretty good beginning. Let's wait how the market will react on the ECB interest rate decision, if they will deliver, and then of course there is still a whole US session ahead of us. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. Take care and bye bye.